Sound test. Let's just be 100% sure. Okay, nice. Okay, and okay, and Welcome back to another episode of our Market Outlook series. I am Kavita Agrawal, the founder of EXP-Invest. And today we are here to talk about Nifty, Bank Nifty, and the intersector chart analysis. We do this analysis every week on Friday at 4 p.m. to see, first of all, how the momentum or the waves in Nifty are unfolding and what do they tell us about the coming weeks. And we do the same for Bank Nifty. And of course, the intersector chart analysis we do every week to determine where is the momentum heading and where should our capital also follow. So without any delay, let's move forward to the chart of Nifty. So like every week, we'll start with a 3-minute time frame. And you can see on this 3-minute time frame that the momentum has been phenomenal. So this is Friday, and this is where we opened this week. Oops, I'm gonna move this a little bit higher. So this is where we open, right, with a massive gap up on positive cues from the political front. Um, let's see. This was a upside of almost a percent, so 220 points upside on the opening on Monday itself. And this entire week itself, we've rallied a massive 3.5%. So if you look at the 3-minute time frame, the last week, or the rather the last to last week when we did the market outlook, we said that we are waiting for a solid breakout on the 3-minute time frames RSI above the level of 60. That breakout for us came at the end of November, right? And this is when we very aggressively allocated capital to the market, right? This is also where the momentum really caught on a very sharp rally, very sharp slope, we would say. Now, what do we see is that this positive momentum is definitely still very strong, but the 3-minute time frame is giving signals. So, right here, if you see this resistance that has started coming in from the level of 60, even though the price is still at the all-time high, this is an indication that a very mild correction might be forming. Now, this is obviously the 3-minute time frame. So, the maximum it can give us, a perspective of is maybe 2, maybe 3 days at max. Okay. So since this started off on Wednesday, we can see that Wednesday, Thursday, and Friday, we've already seen some subdued activity in the market. Now, in my Telegram channel, where I'm connected with people on a more live basis, I told them that this week is expected to be, since I noticed this change in the 3-minute time frame, I said that next few days there might be some rest, so not to worry about it. But let's move on to one time frame higher. Now, what is interesting is that even the 15-minute time frame is showing a negative divergence between the price and the RSI, which is again indicative that a small correction may be forming. But that being said, there's absolutely nothing to worry. And why there's nothing to worry, I'm going to tell you about that in a moment. But let's focus on the 15-minute time frame. So two things jump out at us from a very quick glance. Number one is that the negative divergence between RSI and the price, which means that price is still at the same high as the previous high, but the RSI is taking significant resistance at the level of 60, 65, right, which is a negative divergence. So we can expect a little bit of a bigger correction. So this same phenomena was also noticed at the beginning of the trend where the price made a higher high, but the RSI made a lower high. And then we saw a very, very small dip in the market. How much was that dip? Let's take a quick look. That dip was oh, stubborn. Um, Barely 100 points, right? So from this dip, if we see like a 100-point dip, it's honestly nothing. It's already taken that. However, I have a support at the level of 20,750, which I think should not get breached whatsoever in this amazing momentum that we're seeing unfold. Another thing that we can notice is the volume activity. The volume activity has taken a bit of a dip. So this is the 20-day average volume versus the 100-day average volume. Okay, that is the math behind this histogram that you see. And what we can see is that on the 15-minute time frame, the recent price activity since Wednesday shows a little bit of dip, which is actually to say that this whatever this is happening is not going to sustain, right? Let's move on to one time frame higher, that is the 75-minute time frame. Now, the observation that we made about the volume on the 15-minute time frame, right? This is a lot more pronounced in the 75-minute time frame because you can see this massive decline kind of thing. And the volume was naturally the highest on the 30th of November, right? Basically, when the acceleration started from 28th November, but the volume really picked up. The participation started to really come into the market from the 30th of November. Now, what is very noticeable is that even though this volume is visually looking like it is declined, the fact is that this in no way suggests the end of any rally, right? It's just suggesting that, it is a little bit of rest period because come on, the index has rallied very strongly over the last few weeks. So if you look at the RSI here, the RSI is extremely bullish. I mean, there are very few things that I love as much as the RSI sustaining above the level of 75, right? As a swing trader, for me, that's like super bullish trend, lots of, right? So the 75-minute time frame chart looks extremely bullish. And if we talk about the daily time frame, oh my God, the daily time frame is another super, super duper bullish stock. The volume, excellent. The RSI, excellent. The way the trend is unfolding, excellent. So if you watched my previous sessions of the Market Outlook series, you know that my target on Nifty initially was 21,300, but now I've revised my target to 22,000 because that is where my ultimate resistance trend line lies. Now, depending on how much time this index, rather the index takes to unfold towards the target, the more time it takes, the target will keep moving higher and higher up following this particular resistance trend line, which I'm going to thicken for you. This is the resistance trend line, which is actually my target. So for now, I'm putting out the level of 22,200. But if this rally loses the momentum, but it still continues to go up, then I will be revising my target to further maybe 22,400. But for now, this is what it is. With that, let's move on to the chart of Bank Nifty. Ooh, another very strong rally in Bank Nifty. And my first target has been achieved of 47,350 has been achieved, but it looks like I have already given you the second target of 49,500, which also I expect to get achieved considering how strong this rally that is unfolding in the banking sector looks like. If you've seen my past series, you know that I'm not a very big believer, or rather, I'm not a very avid trader in banking sector. So, I don't give a lot of recommendations because, again, despite of technical and fundamental studies, the activities which are, human activities like government policies have a huge impact on how the banks play out. So here we can see that the volume turned pretty positive during this rally, which lends a lot of strength. So actually, if Bank Nifty comes and takes support at the level of 46,400, right? I think that would be a very attractive point to buy banks again. I personally, in some of my clients' portfolios, I had some banking positions, but what we can see is that today a lot of those positions actually triggered their trailing stop losses and ended up in profit booking, right? So that's about banks. Now let's move on to the indices, the intersector indices chart. And we will see how has the rally been unfolding here, who's the winning sector. Now, let's change the time frame to maybe 75 minutes because why not? And let's set this to, yeah, there you go, since the beginning of this month because actually let's take it from the little bit behind, right? I need some activity of Friday in this. There you go. Okay. So since Friday, what we're seeing is that the energy sector has emerged as a definite winner with a rally of 7.44%. Now, energy sector being positive is something that I have commented about in the Market Outlook series before also. So energy sector has done pretty well. The PSU sector has come back into momentum, something that I totally missed on. So it's up 7%. The PSC sector, the public sector enterprise sector, so this was indicated to be very bullish, and I've been talking about the PSC sector since the last few sessions, and this is up. Okay. And this is up 5.5%, which is great. Bank Nifty close behind, private bank sector close behind, commodity sector 5%. Finance sector, CNX finance sector is where I think some very interesting opportunities are coming up. And this I said last week as well. So if you want to know more about those opportunities, I suggest you join my, sorry, I suggest that you join my Trade Together program. How to join it? You can basically you can see the link shared by the ET moderator for Gap Up. I'm going to share that link too. So Gap Up is a platform by Rigi and Economic Times and Money Control together, where you can find SEBI registered research analysts like me to recommend you trades, not just stock names, but trade setups with proper stop loss target and everything. That at least that's how I work. In addition to the stop loss target, I will also tell you how much of your total corpus you should allocate in every single stock. Because remember, if you want to become a profitable trader in the stock market, there are two things that you need to do very optimally. One is your risk management, one is your capital allocation, right? Of course, there is a lot of other steps behind being successful, which I, by the way, cover in my advanced technical analysis course, which is totally focused on um, swing trading. So if you want to know about that, then please join my Telegram channel. I'm going to drop the link of that in the comments below as well. Okay, so coming back, so what we can see is the service sector, finance. Okay, service sector, metal sector, and infra sector. Here also, so see the market overall is very, very attractive right now, right? IT sector is also attractive, but you have to be a little careful because the signals that are turning up on the IT sector are a little bit confusing. I am not very confident of those. So my investments in the IT sector is more from a long-term perspective than from a short-term perspective, right? Healthcare and pharma sector, they are rightly at the bottom of the ladder because um, pharma and healthcare sector, we picked up on those rallies right at the beginning. And now is the time we've approached the stage of profit booking. So if you see my market outlook series from maybe 2, 3 months back, you will see me advocating the pharma and the healthcare sector very strongly. But now I think they are heading towards a bit of a profit booking kind of state. So fresh entry is definitely not recommended there. The FMCG sector, the consumer sector, and the consumer consumption sector, and the consumer durable sector. I think these three sectors are going to be the underdogs for the next maybe few months. Uh, because stocks like Bajaj consumers, they are showing, so they already have strong underlying rally. But despite of the strong rally in the market, they are in what I would call a bit of a consolidation stage. And I am, however, very, very positive. So I am building my position. I'm also recommending my members to do the same. Again, if you want more information about how I help people do proper trades in the stock market, please connect with me on my Telegram channel. That's the best way to get connected with me. Okay. So with that, I have presented everything that I had to present. Now I'm going to take some time to help you with your stock queries. So look at your portfolio. If you have stocks that are in red, drop the name and the cost, and I will tell you what your stop loss and target should be. Similarly, you can also get an entire portfolio cleanup service done, or you can get a one-on-one consultation again for the The link of those have already been posted by the ET moderator, so just quickly scroll up and find them. So Osho has a question for me. How can I become a profitable trader? Okay. So Osho, the first step to becoming a profitable trader is to become a disciplined human being. So trading is nothing but following a series of systems, very very with a lot of okay. Being a profitable trader is basically following lots of systems in a very disciplined manner, and I personally have systems all the way from identification of the stock to monitoring it to making my position to trailing my stop loss to exiting the position and then doing a past trade analysis. So that's how I come the whole circle. So if you want to know more about my process, my systems, my dashboards, which help me become a profitable trader, then again join my Telegram channel and consider joining my advanced technical analysis course. Okay, let's look at our other comments. I'm gonna close this window and there we go. Okay, thank you so much for posting your comments. Let's take a quick look. Ashish is asking Coal India for short term. Ooh, Coal India, one sweet talk where I had a huge position some time back, but now it's booked out. So Ashish, I think Coal India is not attractive anymore. I'm going to show you why if you're interested in the intellectual part of it. See, the price here is making, oh, sorry, just hold on. See, when I tell you about the system also extends to all my drawings. So I have dedicated drawings for each aspect of my analysis. Like if I want to draw short lines, then I use one particular tool, right? So if sometimes for whatever reason the settings get changed, I have to change it back immediately. Okay. So what you will see is that the price here made a bit of a higher high, but look at the volume. The volume has declined. Look at the RSI, it has declined. So there's clearly divergence. So for the short term, at least, Coal India is not looking attractive. I would want to see the stock come back to at least the 200 EMA, that is the 326 level, or the RSI maybe come and retest the level of perhaps 40, maybe even 30 to, for me to have any interest in Coal India, especially from an investment perspective. Coal India is, my friend, a no-go. So Vineet wants my view on HCL. I think, okay, I don't know what stock this is, but I'm guessing you mean HCL Tech. So please write the name of the stock properly. Okay, so HCL Tech, I think, is a bit of a missed train because the target of HCL Tech for me was around 1360, which has already been achieved. So no go. HDFC Bank, is it good to buy? This was for Yashpal. Let's see, HDFC Bank. Ooh, again, oh, strong rally, but the momentum strong, but the volume not so encouraging, right? So RSI on the 15-minute negative and 3-minute not so promising either. I don't think HDFC Bank is a very good stock to move forward for you. Okay. Um, let's see. Alok Industry. Oh my God. Why would you want to buy a stock like that's why. Okay. Hmm. Fresh buy in Alok Industries. I'm not a big fan of this company. I don't think it's a very good idea, but the volume is also very strong. I think my biases are probably kicking in here. Sorry, I don't have an opinion on Alok Industries for you promote. Piyush Gupta is asking for ISCI from this level. What level is this? 27, and it's a strong trender for sure, but it's a bit of a it's a bit of a wealth eroder as well, and it has rallied pretty strongly, and the volume is not supporting this rally anymore. And I would say no, it is not a good idea to enter the stock right now. And just to remind you, the ET Markets moderator has given you the message to subscribe to the swing trading plan by Kavita. That's me on the Gap Up platform, and the link is right there. Be sure to click on the link and check it out. Fresh entry, in fact, for Ancena. Okay, FACT, fertilizers and chemicals, right? Okay, let's see. Fresh entry, strongly moved away. See, okay, so in my technical analysis course group, I just posted this message today that in the process of trading, there are 5 stages that you need to adhere to, right? And you need to find which stage to be most active in depending on which stage the trend is in. When you can manage to sync up your stage of analysis or swing trading with the stage of the trend, you will definitely find success. So now the market has already moved significantly. Okay. Now is a time when maybe the profit booking or the trailing stop loss stage would be a lot more active. This is not a very good time for identification and fresh entries, especially in stocks where the trend has already run up. So look for stocks which have an underlying strong trend on the daily time frame, right? But they haven't rallied yet. Okay. And which sectors you should be looking out for to find such stocks? I have already indicated that on the market outlook. If you missed the discussion on the intersector analysis, then don't worry. Right after this live session, within a couple hours, I will be uploading my full video on my YouTube channel. So I'm going to drop the link of my YouTube channel next. Please make sure that you go and subscribe to the YouTube channel so you don't miss out on the Market Outlook series recap. That will be an edited and a more crisper, more meatier version of this live webinar, basically. So Ansina was also asking for Ambuja Cement. Ironically, we've just booked the profits in Ambuja Cement, and I will show you that message. So this is the Telegram channel, and you will see that we just booked profits in Ambuja Cement today. We booked a 20% profit, 19.8% profit in just 37 days. So I don't think Ambuja Cement is a very good stock for you to make a fresh entry in right now because now it's reached the stage of profit booking, not fresh entry anymore. Okay, let's move on. We have Akshay. He wants suggestion on IOC. All right. He has 27% upside. Fantastic, fantastic, very good. You should definitely continue to hold on to IOC. Fresh entry for anybody watching is not recommended, but you should maintain a stop loss on your existing position and your stop loss, depending on how the price is unfolded and the way the rally is moving really, really fast. I think it's very reasonable for you to maintain a stop loss at 115, 114 range. Akshay, congratulations on the fantastic move that you've captured. All right. Let's see. NMDC for swing purpose by Prateek Tak. Prateek, I think this is the first time you have joined the live session, so welcome to you. Oh, fresh entry in NMDC is absolutely not recommended at this stage because, my friend, this is a mistrain. Can I wait for correction now for fresh entry? Which sector you bullish next quarter? So, Osho, I just covered my view on sectors in this session itself. So, just subscribe to the YouTube channel and wait a couple hours until I upload the edited version of this Market Outlook series. All right, Dharampur Sugar Ranjit. Dharampur Sugar. Is it this? Ranjit, I am not sure. Quickly, let's take a look. I don't think this is correct. Okay, it's taking way longer than I'm comfortable with. Did I see the name right? Oh, Dhampur. I'm so sorry. There you go. Dhampur Sugar. I'm guessing you want analysis for the short term, not the long term. Okay, there is some trend unfolding on this, so Let's just take a step back, and on the weekly time frame, we're going to draw some trend lines because it's so important to know the direction of the trend and fit and do our analysis on the basis of that rather than do analysis and the fit the trend to our analysis. Um, okay, so okay, strong resistance. I wouldn't call this a divergence. I think Dhampur sugar is giving a little bit of a mixed signals at this point of time. If anything, it is definitely not bullish because on the 75-minute time frame, right? If you see the volume, just look at this increase in volume when the prices increased here, and then the increase in volume when the prices declined here, right? So I think the chart is very mixed up. So I wouldn't rush into making a position. I would wait for more positive signals to emerge. And then on the 15-minute time frame, the price RSI is clearly showing a negative range, which means that there is a good chance that a little bit more correction can be witnessed. First support would be 218, and as you can see that 218 is around good 7, 8, 8.5% away. So you don't want to take a risk with that big of a stop loss. NMDC, I already checked for you, Prateek. All right. Let's go to Pramod's request for trend. Very, very beautiful rally. What an incredible move. And we can see that the trend is still young, still strong. I think it is a good idea to accumulate trend, but in small quantities because your stop loss that you need to maintain, unfortunately, I can't give you a bigger stop loss than 7% here. So 2648 would be a stop loss roughly, and accumulate the position gradually in trend. Now, Akshay is asking whether IOC is good for long term. So, Akshay, I will need to do a little bit of a more detailed analysis to comment on the long-term aspect. But if I do a quick technical analysis on the weekly time frame, then I see that it has just broken out of an important trend line here with strong volumes. So I would suggest, my first suggestion would be that it does look strong for the long term, and I would expect it to rally all the way to its most far away resistance trend line that you can see on the chart. Okay. All right. So, Brangesh, you're asking for Adani Power. I'll give you a very envelope view on the Adani stocks. Don't. ICICI Prudential. Let's take a look. This is the last stock of the day for us. All right. Strong, strong, week daily, week 75, week 15 minutes. So ICICI Prudential is a no-go. In fact, I had holdings in it, which I recently totally exited. So you should do the same. And with that,